Yo, it's Teddy, Caravan Crypto, and we are going to talk about Bitcoin versus inflation. I really just want this to be a quick video because my videos have been going like super crazy long. So let's get into it. First off, we're going to clear this word inflation. What is inflation? All right, I'm going to read the definition. Inflation is a quantitative measure of the rate at which the average price level of a basket of selected goods and services in an economy increases over some period of time. It is the rise in the general level of prices where a unit of currency effectively buys less than it did in prior periods. Often expressed as a percentage, inflation thus indicates a decrease in the purchasing power of a nation's currency. Whew, man. All right, so some key takeaways. Inflation is the rate at which the general level of prices for goods and services is rising, and consequently, the purchasing power of currency is falling. So, what does that mean? It means your dollar doesn't buy as much as it did yesterday. Okay, so let's say a gallon of milk is $4, right? $4 for a gallon of milk. If your money is deflating, which means that you need less of it to buy those same goods, then that $4 gallon of milk will probably be $3. But if your money is inflating, if your currency is inflating, then that $4 gallon of milk today or yesterday is now $5 today. And right now, where we're at in the world economy, we have mass inflation. There's a meme going around the crypto community that says money printer go brrr, because it's just working overtime printing that money, baby, which is not really printing money. It's just minting coins and then turning it into digital video game points. So anyway, there's a thing at the bottom that is kind of peculiar, right? It says that ideally an optimum level of inflation is required to promote spending to a certain extent instead of saving, thereby nurturing economic growth. An optimum level of inflation. They're saying that there is a good amount of inflation that promotes spending. So there's a good amount where the power of your dollar decreases over time so that we can promote the spending of it. Okay? Promoting the spending of it. Okay, now look. It's peculiar to me. Who like if you have to drop the value of a currency to promote the spending of it, then what will people be spending it on? Don't people just buy what they want to buy? Like if they're not buying it, maybe they don't want it, or maybe those services or products that people buy should go out of business because people don't want them. If they're not buying them, or they should pivot and innovate in order to keep up so that people will buy them. Who actually benefits from spending money? Probably banks, probably payment processing systems, definitely government in terms of sales tax and other tax revenue, wholesalers, and government tariffs, right? These all profit from people spending money. And if they're dropping the value of your currency to try to push you to spend it instead of save, the only people that really benefit is you. Is them, not you. Because if you can save money, right, then you have a cushion for times where things are hard and you might need to access some money, right? It's estimated that the average American would not survive a $400 emergency. A $400 emergency. Chances are people are dealing with those a few $100 emergencies quite often, right? And not able to handle it, or trying their best, or resorting to drastic measures to do so. Okay, so what does this this inflation, this optimum ideal inflation, really have to do with the consumer and the seller? Not much. But I could see, if a group of people could benefit from controlling the inflation and deflation of a currency, they'd probably do it. But you and the person you buy milk from, or a TV from, or whatever you purchase, you really don't need that kind of manipulation in your life. Okay, like businesses who literally only make money on what you spend would probably love a system like this, in my opinion. So what could you do, right? Because we're in an economy where the system is set up and inflation is not it's not under our control, and the people who control the inflation benefit the most from it, right? So what could you do? The key is you want to turn cash into anything other than cash, but most practically some kind of item that is valuable. All right, and we're gonna take a look at three particular items. Usually, like these are like the most popular items. So, inflation protection: Bitcoin, gold, and silver. Okay, we're gonna take a look at a couple of things, but first, in order we want to be able to catch inflation, right? And inflation is unlikely to explode overnight, but as it starts to come up, you don't you want to be able to act when you see it happening. And in order to pick something to put your money into, you don't want to go into things that are already bubbles like real estate or stocks. These are massive, 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 massive bubbles. The biggest bubbles of all time are these two markets, and you don't want to touch those if you're trying to combat inflation, because these are definitely going to tank at some point. I don't know when, but it's going to happen because it's a market and it's had 11 years of tremendous growth, and we don't need that anymore. Now it's time to pay the piper. So you want to watch for prices in your world, right? If necessities aren't going up, then that is a great sign. In pre-runaway inflation, prices go up in fits and starts. Beer one day, eggs the next, broadband the week after, etc. If suddenly there are fewer M&Ms in your candy packet, then that's a red flag. If you are convinced that inflation is happening, then you can look to money supply growth for a steer on how far it is going to run. Okay? Another thing to look at. It's unlikely to explode overnight. Might take a year or more. How bad is it going to get? Okay? Well, here is a worst case scenario, and you can wind this back as much as you like. The UK's government debt to GDP is said to be heading for 120%, up from 80%. It's got to 105% in a few short weeks. 120% is credible, but by no means a certainty. At the end of World War II, the British debt was about 240% of GDP. So we're talking about the debt of a country compared to how much money it earns in a year. That's what the GDP is. Now here comes the zinger. While the official figures state prices went up 400% between 1947 and 1975, if you bought an inflation hedge in 1947, you'd be lucky to have the money to do so by 1975. It had gone up roughly 20,000%. That's 200 times, not the 4 times that the official figures tell you. If you want to check this yourself, just get an auction catalogs of Sotheby's, which is a real estate company. They do sales and investments for those years and compare the results. As a side note, the Dow Jones is up 147 times. It's got to come down. Okay? So where to protect your wealth? If most of it is already tied up in things, you are fine. It's really about protecting your fiat. What are the havens for cash or near cash? The first on the list is Bitcoin. This is Forbes talking about how to battle inflation. The first on the list is Bitcoin. With about 2% of new issuance mandated by the system, new Bitcoin cannot flood the market. There's merely a sprinkling of it in existence in comparison with the untold trillions of fiat out there and now being birthed. For BTC to suck up as many dollars as gold does today, it would have to be 20 to 30 times higher in price, which is $200,000 to $300,000 a coin. I think it's going in that direction, upwards of $200,000 to $300,000 a coin, $500,000 a coin, $1 million a coin. I think these are realistic numbers to hit within the next 5 to 10 years. But what he's saying about the 2% of new issuance mandated by the system, this is talking about how you can't print Bitcoin, and the network that runs Bitcoin limits how much new Bitcoin can enter the market. And that same network also puts a 21 million Bitcoin cap forever that could ever be in existence. So at some point, which I think the year is 2145, we are going to run out of Bitcoin in terms of like new Bitcoin getting issued. There will just not be any more Bitcoin getting issued at all. All right. And that's something to think about if you're looking to hedge your bet against the US dollar. All right, number 2, gold. Gold is not being mined at levels beyond ambient consumption, though a big price hike would bring out sellers, and there is a lot of gold out there. So if the price of gold went up, people would come out the woodwork and start dumping their gold for cash, which really doesn't make any sense, but they're looking at, everybody's measuring things in reference to dollars, right? That's how you measure the value of something. Think about your time, dude. You measure your time per hour in dollars, okay? So even so, gold is the go-to inflation hedge of those folks with the most to lose. The older, pre-personal computing generation and rich people, they will go to gold, and only the fleetest will look at Bitcoin. That means only the people who are like acting the fastest would look at Bitcoin. But this is a key demographic to mention: the older, pre-personal computing generation. And rich people, of course, but this pre-personal computing generation, look, these are the folks that they don't want to use Cash App, they don't want to use PayPal, they don't want to use credit card systems, they want to use checks, they want to use cashier's checks. And I'm telling you, if you're listening and you're part of this crowd where you're digital, you have this romanticism about digital dollars, and you would rather save the 3% and earn that 3% that a payment processing company would keep. You'd rather save that 3% and take the time out of your life to go and process a check, whether you're writing it or cashing it or depositing it. You'd rather do that than pay the 3%. And there's a mentality there that is going to lag behind as this technological world moves vastly forward, and it's moving forward at a rapid rate right now. If you're still on checks and cash, and you're not on Cash App, Venmo, Square Cash, PayPal, you're not on any of these things, like, this stuff is going out. This cash and PayPal, Cash App, and PayPal and all this is going out. You're still on cash and checks, you're going to have to make a gigantic leap forward to catch up with technology. Just my 2 cents here. And consider this, a warning. Not many people are going to warn you. They'll just make fun of you. And that's the truth. I'll be honest with you. So anyway, the last thing is silver. Now, gold is probably, in my opinion, and I'm just some random guy on YouTube, not a financial advisor, I see gold doing 100 to 200% increase over the next 2 to 3 years. Silver, however, is probably going to do much better than that. And, silver is at historical lows to gold. Romans had it at 10 ounces to 1 ounce of gold. The next millennia had it at mainly 20 ounces to 1 ounce of gold. And in modern times, it's been 40 ounces to 1 ounce of gold. Now it's 100 ounces to 1 ounce with gold. 1 ounce of gold. The thing is, silver is a byproduct of a lot of other metal production, and it has lost its photography as a large driver of consumption. But it is still a precious metal, and it is still a magnet for those hoarding resources for rainy days. I think that gold and silver really are romanticized concepts of value. Obviously, a way better alternative compared to paper dollars, definitely 100%. But I don't think that the real value is there, and I think that I'm 33 right now. I'm considered a millennial, and I got kids and a wife. There's generations that are after me. I don't think that they're gonna look at gold and silver as actually valuable. I think they're gonna look at it as jewelry, which will hold a value. You know what I mean? But they're not going to look at it as a hedge for anything because of the simple fact that I can't buy something on Amazon with gold. If my buddy or my daughter or my niece or my nephew needs some money somewhere, and they're stuck 2 hours away, an hour away. They need money so that they can get here. If I have that money in gold, like, what am I gonna do? You know what I mean? Or the snail mail it to them so that they can use it, you know? Or I gotta go down to the pawn shop, sell the gold, and then take the money, deposit it in my account. It's just I don't think it's realistic, you know. But anyway, hey, let's go down to the bottom here. Bottom line is nope, nope, nope. Wait. I think we're up here. That is gold. That is Bitcoin. That is silver. That is commodities in general. In the end, copper, oil, wheat, etc., is a tough way to protect your wealth because it throws you into the den of speculative instruments that can blow up in your face if you haven't used them before. And even then, they can still remodel your wealth when something goes wrong. So just something to think about. You know, we are heading into very precarious times, and financially you should really keep your eyes open and be very open to assessing the landscape in an honest way, not just relying on tradition, but being honest to yourself, being genuine to yourself for, you know, the current landscape and what it's looking like. But yeah, it's just my 2 cents. Thank you for listening. I appreciate it, and until next time, peace.